All right, good afternoon, everyone. Today is January 3rd, Tuesday, 2012. I think I said that backwards. Tuesday, January 3rd, 2012. That's how my day's been. Um, we've had a lot of sideways action this morning in the markets. I'll show you the one trade that we took this morning. We only took one single trade in the live trading session this morning in the live trading room. It was right over here. It ended up being a losing trade. A bunch of partners got out of it with a tick. It had as much as 3 ticks profit in it at one point, but it unfortunately it ended up losing. All right. Now we started the day right here. All right, we started the day with a move up right here on top of the huge gap up that we had. Price was moving up. It got outside of the box here, outside of the box. Put in a higher swing, and it started to pull back down. But this little area right in here gave us a lower high pivot. Okay, so we had to wait for another higher swing pivot to be able to take a long trade. All right, so we had no trade right in here. Now I put the rules. These are the same rules that were on there last week. These are the rules for the 4-tick range trade right here. Okay. One, you get a higher or a lower swing pivot depending on what direction you're trading. The BBC is outside the box like it is right here. Now this was our higher pivot, but then it ended up putting in a double top right here. The next, 2 bars later, they put in another higher swing right there. So once we had that, we satisfied rule number 1. Okay, the BBC was outside the box, rule number 2. Rule number 3, fresh bubble. We hadn't pulled back to the BBC yet, so we still had a good bubble. The pullback to the BBC must be clean. In this case, it came right back down to the BBC right here. And then we ended it with an MIT order rounding the BBC up to the nearest tick. We ended up getting in at 1278.75 is where we got long. 1278.75. All right. Once we got long, it stayed there at break even, a little less than break even for a few minutes, for about 10 minutes. Then it dropped down to within a tick of our stop right here. It went sideways for about another 15-20 minutes. And then finally it moved up into profit, little profit area over here. At this point right here, it gave us 3 ticks profit. If it had gone one more tick, we would have moved our stop to break even. But it only gave us 3 ticks profit right here. I know that some people had gotten out at that point because right here we had been in the trade for almost an hour. At this point, we had been in the trade for about 50 minutes, 50 minutes. So I know some people were getting tired of the trade. It ended up going sideways, and right here the morning session ended, and I was still long from over here at 10:25. I was still long over here at the end of the morning session at 11:30. A few minutes after the morning session typically ends at 11:30, price dropped down, and it stopped us out down here. All right, so we ended up losing 2 points on that. We had 7 contracts on it, so the 2 points was 56 ticks total. All right. That was the result of our single morning trade was minus 56 ticks. Okay. Let me go over some other trades over here. While this was happening, we had right here was our support level on the 2100 tick, and over here was where the BBC was on the 10K. We were looking for support on the 10K and on the 2100. The BBC was within a point of the BBC on the 4-tick range. We were thinking that was going to help us. As it turned out, it dropped through it, and the MA1 is the thing that actually held the price in right here. On the 2100 tick, the MA1 held the price, and it pushed it back up and gave us an opportunity to get out with a little bit of profit if we wanted to. All right, I know a lot of people did, but I hung out because the DOM was suggesting we were going to move up. So we stuck it out. And then we closed back down below the MA1. As soon as we closed below the MA1 again over here, I was thinking that was probably going to be the thing that pushed us down, because the MA1 then held price down. Okay, and that was it. That was all we had this morning. The YM, while all that was happening on the ES, the YM had a pullback down to the BBC, and it went up to the MA1. It filled the window of opportunity right here. All right, that was 405 down to 97. So it wasn't that many ticks. It was only about 8 or 9 ticks. We weren't looking to trade the YM at the time because we were we're sitting in our investment over there on the ES. Now right here there was another opportunity on the YM. Right here on the short side, we had a bearish cross right here, a pull away from the BBC with a pull back up to the BBC right here. All right, that happened during the break, so we did not take that trade. I did want to show you guys the 1/6E trade. It was a perfect trade based on what Jeff had said in the partners meeting last week. What we were looking for was divergence, with these lines starting to roll up, a close above the MA1 above the BBC above the elbow. This line right here, blue, and staying blue for the whole pullback and the close back up above the MA1. That met pretty much all of Jeff's requirements for a divergence trade. It's on the 4-tick range 6E. He got long right here. Those of you guys who were talking about, you have a job and you wanted to know when you could, or what type of setups you could do, that you could do while you're working, or if you could work around your normal work hours in the morning. The 6E trades are very good for that. Okay. Here's another one right here on the short side, and this was at 7:05. This is Eastern time, so if you live on the West Coast, this is 4:05 right now. Here was another one right here this morning. The same type of setup. You close on the other side of the MA1 when you have the divergence down here, and the price just dropped down. It just tanked. Okay. Now the odds enhancer wasn't there for the elbow, but we were below the BBC, so that was there. Now, I just wanted to show that to you guys. This was probably the best trade setup this morning. All right, and it went. Jeff said he entered it 30.59 and scaled some off at 8 ticks profit, which is just right up here, and it ended up putting in quite a bit more. All right, and then it chopped around quite a bit. That's pretty much it for the morning session, guys. I wish we had more to do or more to talk about, but it was just the one trade. And that is it. We're going to wrap it up with that. All right. If anybody has any questions, throw them out there right now, and I'll answer your questions. Okay. On the 4-tick range right now, I'll just go through this for everyone. We have a fresh bubble right here. We haven't touched the BBC yet, so we have a fresh bubble. We could take a pullback to the BBC because we have a lower swing right here, so we could sell a pullback up here to the BBC. Okay, that's on the 4-tick range. On the 2100, and let me bring that up. We have a lower swing there. We are still down below the 50, so we could also sell a pullback up here. Up here it would be 76 you'd be selling. Over here I believe it'd be about the same thing, 76 quarter. And over here the BBC is at 76 half. So it all looks pretty good, except for the support right here on the 10K. That's the only thing that would throw a wrench into it all. One other thing worth noting is we had a pierce of the envelope down here on the 10K. Price at the time, we'll say worst case scenario price at the time was at 76.26, 76.25. I'm sorry, suggesting a 5 to 6 point move down. So it wouldn't surprise me to see it go down to 71 from here. All right, 70, 71, drop down below. All right. Was there a short trade set up on the 2100 tick at about 11:35, Rodney? Yes. Let me at 11:35. Hold on. Let me bring this up. Over here is what you. Nope. That's not what you mean. You mean right over here where it crossed through? The place where you would have been looking to go short on this one would have been a pullback right in here. Okay? You want to get your bearish cross, and you want your cycle to be below the 50, preferably below the 50 in red. Right in there is where you would have been looking for it, or right over here is where you would have been looking for it. Now, when this happened in the room, we were long on the 4-tick range, using this as support to support our long trade over there. but it took so long to happen. We had a bearish cross here, and then this right here was an actual short trade from the 2100 tick. You see price pulled away and it pulled back up right there. Now, what I was saying in the room, because people were asking me, we have trades going in both directions, trades set up in both directions on different time frames, so what do you do? Well, I was already long in this one, and I was saying that the risk on this one would be above this swing right here. So if it got up there, I would be able to take profit on this one over here. Now it almost did that. Okay, it almost got up there. And I was able to take some profit on this if I wanted to. Some people did, some people didn't. I didn't. I stuck it out because it looked like it was going to keep going. It took so long to happen that it brought the MA1 back up above and gave a bullish cross. Now the MA1 held it down here, and if you were in the room this morning, and I know you were, if you were in the room this morning, I was saying that the MA1 held this, and that's good for our long trade, because if the MA1 holds, then it's likely to keep going up from there. Okay, as soon as we started to get these closes on the other side of the MA1, I was saying I think that that's bad for our long trade, and it was. It was short. It wasn't too long right after that. 10 minutes after that, I think, is when the trade finally fell. All right. There. Now I will wrap it up. Okay. Anybody have any more questions? Just throw them out there, and I'm happy to answer them.